Guys and girls, good afternoon, good morning. My apologies if you can hear Mr. Shaker in the background. I'm currently in the Amalfi Coast right now. I've been at a friend's wedding for a few days. Got the chef coming out now to watch this happen. But I appreciate every single one of you tuning in. The last week was absolutely phenomenal with inside the markets. Seeing people grow, seeing people get better, seeing people progress is kind of the goal with inside of this what we're doing. This is completely free for every single person to join. There's no setup fees, there's no monthly costs. We just want you guys to get to a point where you're comfortable taking the trades. If the left hand side of the market has no data, this is where strategy, consistency, discipline, emotionless trading comes in. That's something that Matthew has. I've seen this guy taking trades at the top of the market, and I'm like, nah, he's not going to catch that. And it fucking does. So, like with this, if you guys just come into this and you become numb to the game, you take the trades and you just kind of get to a point where you're like, right, this shit works. Place the trades, get away from it. If you're not comfortable holding to TP 65 million, just take TP1, just take TP2, get comfortable taking profits, right? So that's at a point where you guys need to be comfortable doing what you're doing. So Matthew, my friend, I'm going to let you run it up. If you just request to share screen on here, I'm going to put myself on mute as well. And me and Katie are going to grab some food in a little bit. But I appreciate you as always, my friend. I should allow you to ask to unmute
Good
and
evening, everyone.
to go.
Yeah, good morning, everyone. Me again. It's that time of the week where I repeat myself over and over again. But as Bradley's just mentioned, consistency in this space is absolutely paramount. So we're not going to waste any time. Let's get straight into it. I've sent a request to share, mate. It's not letting me jump straight on. Thank you. All right, let's have a look. Where are we? Here we go. Right, as always, we're going to talk about some trade discipline. One thing I do want to mention just before I move on to the trade discipline and the layering is if we've got some new blood, as it were, on the call this evening, I think it's really paramount and important that we talk about the fact that there's a high probability, in fact, an almost certainty that the first couple of weeks, if not month or so, that you probably will lose money. Doesn't matter how good the signals are, doesn't matter how good the analysis is. When you're learning a new skill, it doesn't matter what that is, there's an outlay of that cost, right? That learning that skill is an investment involved. Okay. So let's say I wanted to learn to be a plumber for some reason tomorrow. It's going to cost me a couple of hundred or thousands to do the course. It's going to cost me a couple of hundred in kit. It's going to cost me a couple of hundred to get a van and marketing and all that stuff, right? To get successful at something, it's not free. Doesn't matter how good the product is or the thing that you're using. When it comes to trading, you're not actually mastering the markets at all, you're mastering yourself. And that is a time consuming, laborious process. And it takes a lot longer than most people think. And what a lot of people do in this space is they'll lose money within the first couple of weeks and they'll just, well, Forex is a scam. This is not for me. When actually that success that they want is no different to any other success. Like learning to drive a car, for example. When you start to learn to drive a car, you don't know where the throttle is, where the brake is, where the handbrake is, all of that stuff. You don't know where the indicators are. And with enough practice and enough lessons that you pay for, then it soon becomes an extension of your arm and you do it subconsciously. And trading's no different to that. So let's look at some trade discipline before we even get into how we layer and how we should be approaching the market with the signals. I want to talk about a couple of key points that are absolutely imperative that we get a hold of before we even start to trade. And what I mean by trade discipline are the things that are listed on the screen. Okay. So we have to follow the same structured process for entering and managing every single trade, regardless of our emotions, regardless of previous outcome, regardless of what we read in the newspaper or on a website. We must enter the market with the same structured mechanical entry model as the last trade. What I mean by that is a couple of main things. So, what I firstly want to identify is that the technical validity of every single setup we send remains valid until a stop loss is triggered or the TP2 is hit. If we do hit a stop loss, it is not a negative thing. It's not a bad thing. And in fact, the stop loss is the only thing that is on your side in the market. It is the only thing that is your friend. It is like a seatbelt in a car. It is there to keep you safe. It is not failure, it's information because we trade order flow. And if therefore we have our stop loss here, it is information for us that we are not aligned with the institutional buyers and sellers anyway, and therefore we do not want any part of that trade. Whilst we relinquish responsibility of a trade at TP1 because it's delivered value, and then it's up to you what your own risk tolerance is past that point, our trades are set up to stop loss or TP2. The reason for that is we will note it, you will notice that on many occasions, the price will take TP1, come back to entry, and then go to TP6 or TP2 or TP whatever it is. And sometimes it will hit a stop loss after that. We do not call the re-entry because we've done this in the past and it actually becomes counterproductive for our traders. The next thing I want you to really concentrate on is your position sizing. We avoid emotional, impulsive changes in lot size, and I want you to be sticking to the same lot size week by week at least. Okay. We do not go, right, we hit 5 wins back to back, we're going to increase our lot size. Then if we hit a stop loss, you've just wiped out all of that gain. And equally, if we hit a stop loss or 2, even if we hit 2 back to back, we do not decrease our lot size because then it's going to take you a lot longer. You have to use the same lot size on every single trade week by week and only increase it when safe to do so if your equity allows it. The next thing I want you to concentrate on is being extremely consistent with your profit-taking habits. Now, I want you to use a defined take-profit strategy, and I want you to outline that in your mind or write it down before you even enter a trade. We do not take profits based off of how the market looks. We take profits based off of past experiences by journaling, finding out what works best for us, where you're comfortable taking money, what profit you're happy with, and based on what your risk tolerance is. So if you are a TP1 taker, take TP1 all of the time or for at least a couple of weeks. If you are a TP2 taker, take TP2 all of the time, but for a couple of weeks. If you are a set stop loss at break even at TP1, then hold for the rest of the TPs, then that's fine, but do that all of the time. Again, it's the same. We have to have a plan. Your emotions, your eyes, and your brain will lie to you. You have to have a mechanical system to stand by. This is where the success really comes from, is having a consistent procedure in place before we are even in a trade. We must be layering at the uniform levels that I give to you. That's every 10 pips. You can do it every 5 if you want. I don't think it's even possible to do that personally from a trading point of view. But if you want to go every 5 pips, you can. Whatever it is, make it uniform. The messaging in the group is every 10 pips, and I'll show you the layering effectively in a moment. And that's what I stick by. That's what I personally do myself. So whatever it is you choose to do, again, make it uniform, do it every single time. And the last thing I want to just touch on is that everything that we put in the group is to provide you with the information to make informed decision off of your own risk tolerance. The information we give you is in real time. It is only ever there to help you. It is not to confuse you. But every decision you make has to be based off of your own risk management decision, including that exits, and it should always align with your risk tolerance. So with the trade consistency out the way, let's have a look at 2 examples, and then I'll open up for Bradley maybe to pick a few questions, so long as they're not too silly this week. So as we have in front of us here, we have got gold on the 1 minute time frame. This is where we take all of our executions. We use the 15, the 5, and the 1 minute, but we execute from the 1. And that's what gives us those really tight stop losses and those really, really precise sniper entries. Don't worry about why it's a buy zone right now. Just know what it is. And as you can see, we have a down close candle. Price is traded above it. We are now just waiting for price to come back into that range before I send the signal. In this example, we've got a perfect mitigation at 3956. So this would be where I would send the buy signal. What we're going to do is when the message comes through at Telegram, you're going to open up your MT4, your MT5, and you're going to make sure that the first 4 digits match the first 4 digits in the stack, which is 3956. And in this example, as you can see, they did. Then what we're going to do is we are going to open up our buy limits at the other numbers inside that stack. So the next one would be 3955. Then we would buy limit at 3954. And then we would have one at 3953. And obviously we can see it didn't go down to 3952, so we won't bother with that one. So what we now have in the market is our market execution or our worst entry. And then we have 1, 2, 3 more layers. Okay. Now, in this example, price fully layered into the stack, came bang on to 3952, excuse the typo there. Then what we're going to do when we are in these trades and we have 4 layers, you have 2 choices. The way the group is updated and the most risk averse, safest way to trade is as soon as price comes back through the layers, we take them out one at a time. So we would have our best entry. As soon as it came to our second best entry, we would close that one off. When it comes to our next entry, we would then close them off. The reason we do this, excuse me, as and when the price comes into these zones, into these trades and these executions rather, is that if we now hit stop loss, we only hit it on 2 positions, not the full stack. Of course, if you like a higher risk profile, you want to go for larger profits, you can hold all of the layers and you can decide what TP level you go for. But the group is updated in the most risk averse way. And what I recommend is that you only ever have the best entry running. And then you can obviously hold to whatever TP it is that you decide to set. Okay, let's move on. We'll do one more example. Let's get rid of all that. Here is another buy zone. We'll take this first example here. So this is a down close candle again. We've got a buy position at 3981 when the price came back into the range. And that was there you would get MT4 and MT5, make sure the first 4 digits match, and that's when you'd execute. Then you would set up your buy limits, 3980, 3979, 3978, 3977, and of course 3976. Quite a large stack on this one. This is why we use this, because we can never guarantee how deep into the zone it's going to go. Now, in this example, we're quite heavily stacked into this, right? Now, as you can see, price has done exactly the same thing. It's fully layered into our stack. And as price has pushed back out, this is where we would slowly be taking them out. So we would start with, we would have our best entry in the market here. And as the price came back down through our layers, that we would be closing these positions off as price action came back through, take them at break even or a small profit for the most risk way to trade. Otherwise, you can leave them fully stacked. Now, you got to remember, though, if you hit a stop loss on a full stack, the stop losses are going to be pretty large. Conversely to that, if you hit all your TPs on a full stack, the profits are going to be massive. Whatever you do decide to do, make sure you're consistent with it and just understand that the group is updated in this way. So we've had questions before where we've said 20 pip stop loss. And what's happened is prices come all the way through the zone. It's fully layered and come back out. All of the entries are out. And now we hit a stop loss from this area here. So that's why we get the much smaller take profit levels than if you weren't taking the if you weren't taking the trades out, then you are going to hit a bigger stop loss. We were only ever called the stop loss that was the maximum or minimum it could have been at the time. And therefore, this is why the group is updated in that way, because it's far safer. So I'll just run that back and then we'll look at that one more time. So as I send the signal, 3981, I want you to open up MT4, MT5, just click the buy button. Then I want you to set your buy limits up at all the other layers in the stack. And as you can see, price came into our zone perfectly and layered all the way down to our best entry at the 50%. As soon as price comes back up through the layers, we are closing them. We are not waiting for price to come back to our worst entry. We are closing them as they turn into profit until the only entry we have left is our best entry. Then, of course, again, you can hold your best entry to whatever TP level it is that you have set, whatever your risk tolerance is, or wherever you like to take profit. And that's essentially how you layer. Again, guys, I just want you to pay attention to the way that the group is updated. If you choose to hold those layers again, that's completely fine. I'm not saying it's a bad thing to do. It's something that I will do on a lot of occasions, but the group has to be updated. And we have to give you the information based off the most risk averse way to trade. And that's it in a nutshell.
Nice and easy. Back,
Yeah.
steady away. And the thing is, guys, we've just done that there in however many minutes.
Mm.
So, like, a lot of you are confusing the process by trying to overcomplicate things and trying to worry about what to do, how to do it. If you don't know how to do buy limits, don't know how to do sell limits, I've got them on my YouTube. For those of you asking me, well, why are we not selling when yada yada yada? The gold is flying through the roof. So us putting sells into the market when there's no data to go off. Again, if it doesn't align with a strategy, it's not just like gold's dropping, let's sell. Like you guys more than you can do that, but you're gonna get pillaged, right?
Yeah.
So like with this, we've got a system in place. It works, week in, week out. Matthew comes on here and he shows you the results. He shows you the entries. He shows you the stuff. The reason that you might be on here losing is the kind of you're not following the system. And like people asking me like, what's his profit strategy? How does it work for him? Yada yada yada. He's showing you. Like the trade layers. It comes back up. He takes this one out. Comes back up here. He takes this one out. He comes back up here. He takes this one out. He's still got this one running. If he wants to go balls out, he might not remove them. But again, he's okay with. I guarantee this guy could hold 3, 4, 5,000 pips of drawdown. He'd be sweet, right? Probably has. So you guys come on here. You have to be mechanical with it, emotionless, like disciplined. If you can't do that, take one trade. If the move goes without you and hits TP1 and you've still got your buy limits in order and it comes all the way back down and slaps you and hits stop loss, you have to take accountability for that, right? So that's why we're saying, yes, this is copy and paste. Yes, is the ability for you guys to, duplicate what we're doing. But at the same time, there's an onus on it from you. Like you have to take accountability on there of to be like, right, okay, how does this work? And we come on here every Sunday, say the same things, the same questions get asked. Yes, sometimes by new people. My YouTube is Bradley Marchant. Just go on there and type Bradley Marchant. You'll see my little face pop up. I've got playlists on there that I'm updating. I've got a lot of stuff when I get back to the studio that I'm going to be putting on there as well. All these calls go on there. So there's probably 10, 11, 12, 13, 14 hours worth of this. You'll see in the same strategy from today as you will have done from 3 months ago. So again, like you guys have to get to a point with this where it's like learning a new trade. If you want to become a mechanic, a fucking joiner, whatever it is, there has to be pain into the market. And sometimes that is by you messing up, by you learning the way, by you going against what you believe is right. And a lot of times as a grown-ass adult, we think, which is the wrong way. There's people who've gone before you that have made a load of money, that have done a system that works. So you have to remove you out of the equation as quickly as you can. And tonight, you can ask questions. The chat is on. It just comes directly to me because last week you all started answering each other's questions, which is wrong. You're giving each other the wrong advice. So like this is another thing. People want to, be super helpful, which is amazing. I love that. But you were telling each other the wrong things. So like for me, going forward, these calls are just the chat's going to come directly to me so that only I can see that. Because ultimately I don't want you guys giving each other the wrong advice,
Yeah, there's a concept that you should all be following as well. You should be journaling, is the reality. Yeah.
100%.
So we'll have trades that will go TP1, fully layer, go TP28 or whatever it is. We'll have trades that go TP1, go up, come back down, fully layer, and hit stop loss.
Yeah.
We can't give you the data to how much that happens. You need to work it out for yourself. So this notion of copy paste signals in the gold space is a bit of a missell. Doesn't really exist. And if you come into this market, the market, especially under the current conditions, especially with gold, thinking you're just going to be able to press a few buttons on your phone and put it away and make loads of money, yeah, that you're not in the right place. Okay, it's hard work. It's it is a dedicated amount of time you need each day. You don't need to take every single signal. You just need to be dedicated and mechanical with the ones you do. And you need to be writing stuff down. Okay, at the end of the week, then you can look back and go, right, I tried to get in at 8 trades, they hit TP2 and then they came back down to stop loss. Okay, so that means next week maybe you've got a higher probability amount of times of that happening again, and you have to build up a concept about what works for you, what your risk tolerance is, where you're happy with losses, where you're happy with wins. and figure it all out. Like we can only give you so much information. Like I didn't just turn up one day and be a successful trader. I had to do all the same stuff.
Yeah.
I lost a lot of money getting to the success that I did. We all do. You're not going to cheat the system. A couple of my clients this week have had a few shocks because they went off on the weekend and started trading Bitcoin on their own and pushing buttons. And yeah, and, mate, what have I done this? And I said, well, this is the reality. It grabs hold of everyone. So you're not
Yeah.
on your own if you've lost money. It is quite normal. You just got to stick at it. You've got to be
And
mechanical and you have to be dedicated. And it's kind of boring as well. You got to do the same thing over and over again.
And also as well, like I touched on this on the call, I think it was on Monday. Like you have to get to a point where you're comfortable not taking all the trades. And also you can't take them all the time because you're going to be doing shit. You guys work, you've got family, you've got kids, you've got commitments, that's fine. You don't have to be in every single trade. But also with this, becoming emotionally numb to the game. And, Matthew touched on there, like you have to get to a point where this becomes boring.
Mm-hmm.
I don't think a lot of you understand that yet. That this is a you versus you game. So when he says write stuff down, I'm telling you, this changed my life from a trading perspective. I would write down when I was pissed off, when I had a Barney with my ex, when my dog would piss me off, some little things like that. Because it don't take much for me to get angry sometimes, right? For those of you who know, my head goes real quick. So like I had to get to a point where I'm journaling and documenting this because I'm like, right, okay, I've just gone on a drive, someone's cut me up, and their trade comes through. I'm probably not going to put a stop loss on that trade because my head's not thinking straight. So you guys have to get to a point where you realize, right, okay, I stubbed my toe. I had a Barney with someone. I burnt my dinner. Whatever it is that emotionally triggers you to be out of your own control, that is the stuff that you need to pay attention to as to how you feel. So if you're in a bad mood all day, maybe don't trade. And it's not a bad thing that you don't necessarily take every single trade. But we do these every single week. I've got a mindset call tomorrow night before I fly. I'll be in the airport when I do it. And, getting you guys to a point with this where you become like robots, like zombies, because that's the game, and the quicker you can do that, the more money you'll make, the easier the system becomes. And it's just you versus you. And then what'll happen is you'll get to 30K, 50K, 100K, 500K, million, all requires new versions of you. So again, I'll touch on this tomorrow night because it's a big subject. But again, unless there's anything you want to cover, bro, like there's not really been that many questions in regard.
No, I mean, I find it. I just the only thing I want to touch base on the whatever the comments are about sales. There has been probably two sell indications in the last 3 weeks. Now, whilst we've had a 700 or 800 pip drop, which we knew was coming, I don't care if someone if a genie popped out of a bottle tomorrow, right, and it said, "Look, gold is going to drop 1,000 pips, absolutely guaranteed. If unless it meets my criteria, I'm not trading it. I don't care where it's going. Even if I know in my heart of hearts it's going to drop 1,000 pips, where I knew where it was going at the bottom, it didn't meet our criteria to get in a sell all the way down. So I don't care. It doesn't matter to me, right? Because I'm mechanical with this.
Yeah.
If it doesn't meet my criteria, we don't sell. If it doesn't meet my criteria, we don't buy. I could sit here all day and it maybe not give us a trade one day. Then I'm not buying or selling because it doesn't matter what I think the market's doing. It matters what the entry model and the criteria that has kept us safe and profitable to this point tells me. So
So
unless the criteria is met, the logic is there in all its entirety, then we don't trade.
fact. Fact. But guys, if any of you want to go back and rewatch this, it will be on my YouTube. Maybe not tonight. So I'm just about to go out for some dinner now with Katie. But I'll upload that probably a little bit later when I get back to the room, or maybe tomorrow, just before we leave for the airport. But again, it'll be on there. So again, keep eyes open for maybe tonight, tomorrow, when the next trade's sent out, because obviously at the moment we've had some tariff stuff over the weekend, which turned out maybe not to be true. So we could see some nice little movements on market open. That doesn't mean pressing buy or sell as soon as it happens. But again, we're here to help you every single step of the way and help you guys get to a point with this where you're making great money. So I appreciate every single one of you turning up. I'm going to go enjoy another 0% beverage, and I will see you very, very soon. Guys and girls, I appreciate you all. Have a blessed night. Matthew, appreciate you as always, my friend. And
Take care, everyone. Bye bye.